Yes, sir. Okay. Welcome back, ladies and gentlemen. Welcome back. We're already the 6th stream. We had so much fun. The comeback, the trades, the data, the analysis, the setups. LTA, baby. We're looking forward to today's session here. Let's talk about the CPI. We're gonna talk about the dollar, yeah, gold, yes, some currencies, absolutely. In 15 minutes from now, we're gonna deal with the news here. We're gonna talk about the news. Most importantly, we just got the interest rate decision for the euro. It's gonna be just as important. We're gonna talk about that as well here. Nothing too crazy, but the CPI is where it's at. Okay, you can see that the market has been waiting, especially yesterday and today for the CPI release. It's going to be super important. We're going to talk about that here. Really looking forward to see what we can do. The world is going crazy right now. Absolute madness. So it's extremely important that we shift our focus towards improving ourselves and really trying to level up now. The clock is ticking, my friend. Clock is ticking. All right, we're going to talk about it in around 5 minutes. We're going to go through the charts. We're going to see what's going on the dollar, gold, etc. right here. But we need to level up our game. That's it. Let's get the party started. Good to see you, Liam. Good to see you, Wout. Good to see you, Thomas. Grim Reaper, what's up, my friend? Nilam. Hope you're doing well. Thomas. Petru, Christian, Ryu, Nabosha, Marius, Greg. The fam is back. We have our warriors in the chat. We have the family, the LTA family in the streams. They're going to be backing us up today's session here throughout New York. My goal is to make your New York session just a little bit more educational, but also a little bit more entertaining. It's so boring training by yourself all alone in your room. Let's make it fun. Let's make it a fun stream, and let's close the week strong. All right. Tomorrow I'm going to be traveling around. I'm going to be back traveling to Singapore. Actually, I have to go to Singapore again for some business. Looking forward to see you. For the people who are in Singapore, message me if you're there. By the way, that could be very interesting. Anyways, let's get into the charts, because we have around 12 minutes left for the CPI release. Okay, A lot of people are going to ask, what are you going to do? You're going to go buy, you're going to go sell. I don't think that's the relevant question to ask, truly. I think it's mostly gambling. There are always going to be people saying, oh, you see, I was right. Yeah. How many times were you not right? That's the question. Okay, so trying to figure out what price will do in the short term, which candle will go up or which candle will go down, because they quote unquote see something. I haven't anyone seen giving me the proven edge yet throughout 8 years of trading so far. I haven't seen it. I might be wrong. Maybe I can learn something from you. I haven't seen it yet. I rather right now wait for the news here. Before we were playing around last year, we were kind of playing around a little bit here. There's one strategy that I would maybe utilize. But anyways, when it comes down to serious trading and everything that we're looking at here, I want to see first a nice, beautiful 30-minute candle development, and I want to see an hourly candle closure. Okay, it's 8:30. We're going to see a 30-minute development. That means 9 hourly closure. You're going to get a lot more, in my opinion, confirmations, because we know exactly what type of setups we're looking for. Okay. Yeah, in regards to gold right now has been rejected from the fixed or high. We couldn't break above it. On the futures chart, it is the previous daily value area high. You can see how important this range is and how we got rejected there. So indeed, a lot of sellers stepped in here. We are now closing into 8-hour demand. 8-hour demand is sitting right around there. It's not that far away, by the way, if you look at it from that perspective. But 8-hour demand zone is sitting right here. We also have some support right there. So anyways, these are all important layers from a macro higher time frame standpoint. The question always remains when it comes down to the CPI, because even when the data comes out, quote unquote, bearish or bullish for the dollar, you never truly know what happens during the first 30 minutes, right? Price can come down. You think, oh, it's bad for the dollar. And what happens? Price flips, dollar flips bullish, closes bullish, and continues to go up higher. We call that a news failure, okay? You see that happening all the time. Now, what I'm looking at when there is news, I'm starting to zoom out. This is the moment when I literally zoom out and just say, okay, you know, I'm gonna wait for that closure anyways. So I'm zooming out. I'm looking at the areas of demand, areas of supply on the dollar, but also on gold. In the case of the dollar here, you can see clearly that we have been creating that 12-hour supply right here. We are reaching 12-hour demand right here, 12-hour supply right here, 12-hour demand right there. We have a couple of zones, which in my opinion are going to be crucial, right? That 8-hour zone that we utilized beforehand was extremely important for our trade on the Euro USD. Okay, our winning trade this week that we took on a Tuesday 2 days ago with a 2-to-1 restore ratio came from the dollar being in that area of demand and the euro obviously being in supply. And then we had an internal confirmation on the lower time frame, right? That's how we took our trade on the euro. You guys probably remember that trade. Now, again, this is why during certain moments, especially understanding supply, understanding demand on the higher time frame is so important, okay? Everything that we do is explained in this ebook. If you haven't done it yet, you can click in the link in bio. First link, it's a free book where everything in regards to supply and demand, higher time frame, all right, macro and intraday, or lower time frame, volume analysis is explained here for our actual executions, okay? That is something that we are doing here. So I do like it. I like what gold is doing here. If gold pushes back, then that 8-hour demand zone is, in my opinion, a really nice entry, potential entry zone, or a point of interest at least. But if gold decides to go up, it's a pretty similar play, because that means that we have to deal with the internal structure and not the external structure, because only on the lower time frames we can find structure. On the higher time frame, there is no structure. On the higher time frame, I'm not seeing anything of really of relevance here. We don't have created supply, etc. So therefore, that range is a beautiful range right here. And yes, then it's going to come back to that same old question here. How do we execute a range? We talked about this yesterday very deeply. We said breakout, retest, continuation, or breakout, rejection here. I am still not willing to short gold, especially if you decide to come down and then come up, for example. You know, if you bounce from the month and break higher, yeah, obviously that's going to be a different game here. Now, what I can see now is that gold is pushing up 5-6 minutes before the CPI. We're going to find out what's going to happen here. I'm very curious. I'm really also very curious. And the reason why I am so curious about today's news is because next week we have one of the most, if not the most important event of the quarter, leading into the last quarter of the year, October, November, December. This is where I believe we can make a shit ton of money if we do things correctly and we understand the higher time frames, the macros very well. Now, the FOMC is next week, and they're gonna, come out to an interest rate cut of 25 basis points. The chance that it will happen right now is sitting at 92%. You can see that right there. A 92% chance we're gonna cut rates 17th of September. That is important. However, imagine if during that time period, today on the CPI, the inflation comes out significantly higher than expected. Okay? The reason why the Feds increased rates initially was to reduce the inflation. All right? So if the inflation comes out higher than expected here, then that could cause a conflict of interest. That could really cause the dollar to rally over time. That is something that could happen. And that could definitely be something that's not priced in the market here. So we're going to find out. The forecast is 2.9% year over year and 0.3 month over month. Okay? Which is both higher than the previous data here. So that means that the inflation would go up. If that's the case, it's very interesting because then people are starting to question, are we really going to go and, are we really going to go for a rate cut the 17th of September? That could change the game. So that's why I really find this super interesting to see what will happen here during the CPI. Will it come out higher than expected, lower than expected? It's much more interesting from a macro zooming out standpoint, okay? Understanding what could happen in the medium term, especially talking about Q4. From a lower time frame standpoint, from an execution standpoint, from a trading standpoint right now, today, obviously it's just about the right confirmations, the closures, supply and demand, the correlations, and then the internal confirmations around certain ranges, okay? Like we have been talking about right here. Now, another one was the euro. Look at the euro. Euro created that range. What did it do? Let me know in the chat, please. We have been looking at this range already for a while here. Obviously, it was very tricky during the Asian session, the London session. Look at the price action in general. It looks nasty, okay? But my question to you is, what do you see here? What we talked about, for example, already beforehand yesterday, and that is, in this case, what we call the CME right here. The C, the M, and the E right here, okay? If you're new to all of this, the book is so important. It's free for you. You go to the fixed volume profile, you go to page 47. This is where it's explained with different types of explanations of setups built around certain patterns that occur over and over and over again in the market, okay? So the euro did that. The euro created that CME. It broke below the POC. Initially, you can see how the POC held perfectly right there once it broke below it. And once we actually broke out of that range, you can see how the fixed value area low right here actually held perfectly right there. Do you see how these levels are relevant? Do you see how these patterns occur over and over again? Right? The CME and also the CERC. Right here, the C, the E, the R, and the C right there. That is a setup. A plus right here in daily supply. Right? These are the two patterns we always talk about right here. These are patterns that are aligning over and over again. And if you combine that with supply and demand on the higher time frame, and on top of that, if you are a real G and you have a real understanding of what's happening in the market, you utilize some external data, right? Some COT data, you layer them on top of it, you sprinkle some valuation, some seasonality on top of it, you're gonna have a really solid strategy, my friend. A really nice, clean, solid 2-to-1 risk-reward ratio strategy. All right, that's what we're looking at. We're looking at ranges. We're looking at breakouts above ranges. Ranges are everything for us. You can see how relevant this range was even yesterday, right around there. If you look at that beautiful rejection from that level. Right now, we have built a range right here. We are closer to a higher time frame, the month zone right here. All right, so it all depends what news we'll do in around 1 minute from now. If we start to see major moves happening. And yeah, are we going to get towards this range? Are we going to push towards supply or demand? That is something on gold that is, in my opinion, the most important to really pay attention to. And yeah, this also counts, of course, for the spot chart as well here. Okay. That's what we're looking at. So New Zealand dollar looks amazing. We have this previous range as well here. Also very nice. I like this a lot. If you do break below this range, we pull back just a lower low. But again, it depends on the movement. It depends on the news. We're already at our, you know, at certain levels right now. So we really want to see a break. The dollar Swiss, we talked about the same, pretty much the same currencies this week. Don't want to deviate too much from it. We have a range right here. This is going to be interesting. Are we going to see a break higher? Something like that, or are we just gonna break down depending on the news as well here? So that is that. 30 seconds to go. Let's look at the dollar. Let's look at the dollar, and let's go to the lower time frame. 50-minute. I have only marked out macro zones right now. I just want to see what happens here. We have around 10 seconds to go. Boom. Initial push, dollar up. Now we're seeing a potential flip. Gold's holding up. Dollar. Ooh, look at that flip. That's what I mean. Look at that flip. Gold pushing up. Euro pushing up. New Zealand dollar pushing up. Dollar Swiss pushing down. Same as forecast. Okay. All right. Month over month came out a little bit higher. The year over year came out as expected, 2.9%, which is still higher than the previous expectation here. We're gonna see if this will have an impact on the expectation. We're gonna see what the Fed rate monitor tool says, or the CME group says about the expectation of potential rate cuts, etc. here. If this is gonna increase or if this is gonna decrease, we're gonna find out here. But for now, dollar's dropping, gold is rising. That means that, in my opinion, right now, built around what I'm looking at currently, I'm gonna say that the dollar Swiss looks pretty interesting, and of course, gold will be, yeah, obviously interesting, because if gold starts to rally, come up higher, then this is gonna be a big deal. Hopefully see some volume here. Hopefully we continue the process. We're not going to just stagnate. Get a little bit of volume for like 10, 20, 30 minutes and then just die down. We're figured out right there. On gold, why don't you use the previous weekly value area high? Yeah, we can do that as well here, but we would not trade from it anyways because of the news. There we go. In this case, the previous weekly very high is also at the, it's pretty much also at the exact demand zone we talked about here. GU did show a potential short setup. Current weekly very low. Well, dollar index is daily supply and therefore not valid. Plus news incoming. Can you confirm or add to that? Let's look at we can look at GU for a second here. GU bounced from the opening price of the week. You can see that right there. Yesterday, we indeed rejected from what we call the previous daily POC here. We got rejected there from the previous daily POC. Price pulled back into that. Now it's bouncing from the Sunday open. You're looking at a short setup, you're saying? I would say anything below the Sunday open is where things get interesting, because then you have the weekly flip. The weekly candle flip, you're in supply here. I would say a weekly flip is what I would look at for the pound against the US dollar here. Anything below the Sunday open. Price did close on some lower time frames below the Sunday open. Is that not enough? Not on the 30-minute. Maybe on the 15-minute, but it's not about closing below. It's usually about a break and retest, okay? It's a key difference. Closing below a level or having a break and retest are two completely different ways of looking at the market. So break retest is something I would always prefer over a closure. This is where most breakout traders go wrong. This is where most breakout traders lose money because they wait for a candle closure above a certain level instead of understanding the dynamics of a break and retest. I've been seeing a significantly higher return with a break and retest rather than a candle closure. This is why I'm always talking about the break and retest. Every single time we're talking about a break, we're talking about a retest. Okay. Daily time frame looks still holding up very well. Look at gold right now. That 8-hour demand has never been hit. We are actually holding up. And yeah, clearly pushing higher. Dollar seems to be coming down, which makes sense if you talk about a potential build-up towards a massive news release. Yeah, if first demand gets taken out, we're really directly will go to that second layer. So might get a bit messy here. We'll see. Let's definitely stick on gold for now, and then we'll go from there. Lorenzo, do you always trade the CPI? I do not always trade the CPI. No, I don't feel obligated to trade if I don't see any clear setups, regardless. You know, like I talked about beforehand, I take around what 15 trading days on average. So 5 of the 20 days I don't trade. And that's usually around news days. However, you know, if the volume is there and, you know, a setup is there, I'm not just going to say, oh, it's CPI, so I'm not going to trade anything. Obviously, I'm going to trade if I see something. Philip says, my recent future full-time trading is bet on GU longs. Okay, nice. So if that's the case, then where would your entry be? How would you see this chart, and what would you say is your entry model here? Let me know. Randy says 10-year bonds, 10-year yield, I guess, finally reached 12-hour demand. Not the bonds, the yield. Is that correct? Yes, you're right, my friend. You're right. It's finally, it's getting closer towards the body, for sure. The reason why this is important is because if this happens and we hold support here, there's a big chance the dollar will hold support too. This is why we talk about this all the time. This is why that closure is so important. That closure by default is so important. The hourly candle closure here is just... will give you so much information. Lorenzo, since you came back, how many trades were taken on stream? Yeah, we did 5. I think we did 5 streams. We did 3 trades. 5 streams, 3 trades. 4 hour win, 1 hour loss. What's super important right now is that the dollar is currently, it is sitting at demand, all right? It is sitting at demand. That is something that we have to pay attention to right now. We have to pay attention to. On futures, there is a little bit more room, I guess, or not. Are we already there? Pretty much. Oh, there we go. It's coming right now. It's coming right now. Yeah, this is what I mean, right? This chart is 10-minute delayed here. This is why we have a custom dollar chart here, but still, we look at supply and demand here. This is also such a clean demand zone right there. Very clean zones right here. These ones right there. You have this one right here, super clean, and then this one is a bit less strong. Awesome, Philip, my G. Very nice. Bill Jimmy, my friend, how are you, man? How are you, my friend? Lorenzo, do you trade London? I do not trade London all the time. Not as often as I want to. I have a lot of things to do during the day as well for me. Keep in mind, I live in Bali. So for me, London session is around 3 p.m. So usually London session for me is busy. Like I'm always doing things, always like looking, like I have always things to do. However, there is one thing for certain, and that is that LTA doesn't stop there. Okay, LTA is trading London. These guys have been killing it during the London sessions together, so that's just wonderful, wonderful. Can I join a Telegram if I already have a Vantage account because I cannot create a new one? Yes, you can. You can just send us a message, follow the process, and then you should be able to transfer it over quite easily. Very easily, actually. Very easily. Very easily. $10 years of scalping in 42 seconds. I can guarantee you that's an ORB strategy. That's an ORB strategy. Like everyone is talking about the ORB. What is that? What is that? Or am I tripping here?
to you in less than 1 minute. At 9:30 a.m., you're simply looking at the 15-minute candle. When that 15-minute candle is finished, you get the range high and the range
ORB.
low. Now just drop down to the 5-minute time frame, and we're just gonna wait for a candle to break outside of that range high or that range low and then close. You can see we just had that happen.
So that pretty much. Yeah? I hope that makes sense. So yeah, anyways. So back to the... No. What I'm saying is that this strategy actually works. Okay, the breakout, retest, continuation. We call it the ORB strategy. Okay, opening range breakout. If price pulls back to the range high, right here, then people take an entry right there on the breakout and they look for the continuation. They put their stop loss below the range low. They do that every single day at 9:30 to 9:45 on the NQ, for example. The problem with that is that even though the strategy works, prop firms will not allow you to trade this or take profits from it because the fact that it's seen as copy trading. And because everyone else is using this strategy, it is seen as copy trading, even though it's not. They will still see it and flag it as copy trading, right? You enter on the same time, you put your stop loss, you're at the same low, you put your take profit at the same high. It's the same shit. This is extremely, extremely famous, and it tends to work very well, especially when you're trending up with a lot of volume. But the problem is, prop firms don't like it.
Right here. This tells us we want to look for buys. Now we just need a place to enter a trade, so let's mark up an area of recent support. Maybe you enter at a trend line like this, and then when the price comes back to that level, you're into that trade. Price eventually pushes all the way up and smashes your take profit. It took me 10 years to learn this trading strategy. I'm going to teach it to you in less than 1 minute. At 9:30 a.m., you're simply looking at the 15-minute candle. When that 15-minute candle is finished, you get the range.
That's that. Yeah, pretty much. That's the ORB. You see this everywhere. Everyone is talking about it. All right, dollar in demand. Dollar is actually holding up really well. Okay. Dollar is actually holding up really well. Really well. I'm definitely going to mark out this range regardless. Where are we on the currencies? Oh, look at that reaction actually. Wow. Sunday open, internal range. If the dollar reverses, we have something here for sure. We have something here. We have something here. If that's the case, we have something here on the dollar against the Swiss franc. Definitely looking at that for sure. Gold right now, of course, getting rejected from where? It's very low. Dollar holding up at demand. Dollar holding up at demand very well. All right, supply demand, real thing. Supply demand is a real thing in the higher time frame. We'll see. Vicky says, I've been testing a variation of the ORB, but my own thing does produce good results, but never have it as my core strategy, more of an extra thing to pay the bills. Yeah, if you have, let's say, right, you have, let's say, $100,000 cash. Like, who has $100,000 cash, right? Not everyone. However, if you have some, you have some liquidity, you don't need $100,000 cash. You can also have, less than that, obviously. You can automate this much easier. Like this, why would you even trade this manually, in my opinion. Like, why would you? It's so freaking mechanical that you should just automate this. Like, there's no reason for you to get into that strategy and manually do it and manually execute the trade, because you can automate this so easy. What do you use to automate? You can use different layers, my friend. You can use meta quotes. Meta quotes is very popular. You can use TradeOvid if you want to, and just, you know, use the webhooks from TradingView. You set alerts, use webhooks from TradingView, then you connect that to TradeOvid on futures. But if you want to trade on spot, if you want to trade like, you know, on Vantage, you want to trade on the CFD broker, obviously you need meta quotes. Lorenzo, why didn't you take the trade in the dollar Swiss? Rule number 1, 30-minute closure after news. Could LTA be automated? I've done a tremendous amount of research with LTA concepts. And can we automate this? I'm sure in the future there are a lot of ways to do it. It has to be freaking advanced though. Like, there are so many variables that you can't take in consideration to improve it. I already showed you the results, remember? Of how the win rate looked like. And most importantly, not just the win rate, but also how the equity curve of our strategy look like, which is built around what, 2,000 trades. That's the furthest I could take it right here. That's pretty much the furthest I could take it. Anything after that, you know, it's all manual. For example, this is a framework that just takes trades built around the ranges we're constantly talking about, right? These two different ranges. But if we start taking all the other layers in consideration, like the correlations of the dollar, you know, the macro technical supply and demand, some fundamental data, etc., then we will be, I'm 100% certain I will be eliminating all these pullbacks, all these short-term, you know, losing streaks right here. Okay, so even though the equity curve is bullish and it's positive right here, you want to minimize this as much as possible, right? That's the thought process. So I prefer, when I automate something, to just take that in consideration. That's it. So anyways, it's possible, but that is something that I really would like to improve first before it's really, you know, doable. But the fact that it's by default with a pretty much simple framework is profitable and shows us over 10 years of data. This is 2015, 2025, 2,000 executed trades, 1,962 trades with a 2-to-1 risk-reward ratio. I mean, it's you know, the fact that our foundation is positive is already an amazing sign, right? So that's something I can work with. But obviously we want to layer other things on top of that just can't be automated that well. So we're pretty much in the same boat as the beginning of this week. Stronger dollar is... sorry, weaker dollar is gold. If dollar remains weak, it's definitely gold breakout. If the dollar holds tight, then it's going to be the opposite. Then it's going to be currencies. British Kumar. I hope I say it right. Bro, I've been backtesting the LTA strategy and the results are insane. I took the same patterns you've mentioned. CME, CRC, and the win rate is 67.61% with a 2-to-1 risk to reward ratio. That sounds fair. That sounds correct. How many trades? How many trades? You need quite a sample size, you know, in order to really know. 110, okay. Okay. Giv says, I nailed the CPI on gold. Yassine says, if you have an edge and automate it, it has a 60% win rate. As long you don't go below 0, you're going to make in the long run law of large numbers. Yeah, if you are that guy that can be disciplined, that can execute 100 trades following the exact same method, you're a G. Then it's going to work out. Then things are going to work out in your favor. The hardest thing for guys, I've seen it over and over again, the hardest thing for traders is not changing something up after 4 losses, 5 losses, 6 losses. Completely eliminating their strategy, completely ignoring all the rules that they set initially. Threw it all out of the window, baby. And let's just do something else. Let's start all over again. Let's start fresh. Let's start fresh. That's an endless fucking cycle right there. Endless cycle. You will never get out of it unless you stick with it for at least 30 trades. Boom. No matter the outcome, I don't care about winning. I don't care about losing. I care about executing the next 30 trades to the T. That's what happens. Lorenzo, you really took a break after hitting 70K subs or something. What have you been doing so long? Number one, my friend, we have been writing a book for a year. We've been writing a book. I've been writing a book with our team. We have been developing a book, which is kind of like a guide. We call it a war map, right? It's a war map. That's it. It's the trading war map. The thing is, obviously right now the dollar is going to close in the month where we're still holding in a range, in the previous range. And nothing is set in stone here yet in terms of directional buys, for sure not. Nothing is set in stone here. Wow, Lorenzo, which time frame works for the range volume profile? So let me show you what time frame you can use for the volume profile, okay? The first thing that you have to acknowledge is that we have obviously what we call a introduction page in our trading warm app. This is an ebook that you can download for free. 300 pages explaining exactly what we're doing here. You go to the section, the foundation, then you scroll to our LTA framework and you can see here, utilize the macro technicals and the micro technicals, okay? The macro technicals, pure supply and demand on the monthly, weekly, daily, 12-hour, 8-hour. The micro technicals, volume analysis, the fixed range volume profile, the 1 hour, the 30-minute, and the 50-minute. If you want to go to the 5-minute, completely possible. I've seen things playing out on the 5-minute. We talked about Fabio yesterday. He was showing us his top 3 setups. You could see on the 1-minute time frame how many of our trades will be playing out as well here. So it is fractal, okay? But I've executed the most trades around the 30-minute and the 50-minute time frame. Predominantly the 50-minute time frame, okay? I can only give you and speak from what I've done, what I've tested, and what I know the best. That's the 50-minute time frame. I've seen the high success rate right there. So right now, for example, you see the range, you see the breakdown, you see the reaction. Where are we going to reject it from? We're going to reject it from the fixed value area low. Fixed value low. That is what you're currently seeing happening on gold right here. Bro, I'm lacking correlation. How do I improve that? And should I backtest more or start on a real account? Well, that's a good question, my friend. And again, correlations are... The correlations is what I call the hidden framework. Like, this is truly the understanding of how the market dynamics really work from a not order flow standpoint, okay? You have to understand this. Let's say you're trading the Euro USD or you're trading gold and you're looking for a short setup. So you're trying to short gold. You find your setup, you know, gold might be in an area of supply or it might be in an area of resistance. Price taps into that range. You get rejected there and you're looking for a short setup. Okay. Price comes down. You are now in profit because you entered your short there, your stop loss there, and you target whatever you want to target. But what if at that moment, the dollar taps into a major area of support? Sorry, a major area of resistance. Major area of resistance. Okay. What happens if the dollar taps into a major area of resistance? Well, at that moment, the dollar starts rejecting here and it starts to push down. Guess what's going to happen? Gold is going to continue. And so if gold is quote unquote trending up and you're trying to short it and the dollar is in resistance or it gets rejected or it breaks down, guess what's going to happen with gold? Gold is going to go up. Okay. We call that correlations. Understanding the correlations has significantly improved my overall accuracy. Now, secondary on top of that, there is another word besides correlations, which you should never, ever, ever forget. That's the word relative strength, okay? Relative strength. Understanding relative strength and alignment or in alignment with the correlation will give you the edge because you know exactly what to focus on, all right? Correlations are not perfect. It's not going to be dollar down, gold up the same amount as the dollar coming down. That's not how the game works, okay? It could be that the dollar comes down and gold goes up a little bit. It could be that the dollar comes down a little bit and gold goes up a much. There is a correlation, right? One goes down, one goes up. You see this happening a lot here. However, it's all about understanding relative strength. So if the dollar drops an X amount and gold just drops a little bit, yes, the dollar is dropping and gold is coming up just a little bit. What's showing? Is that showing us strength or is that showing us weakness? That's the question. So then your next question should be, what happens then if the dollar finds support or finds demand? We talk about demand, higher time frame all the time. We're talking about volume profiles all the time, confirmation. What happens if the dollar taps into a key level and it starts bouncing, right? Then gold starts tanking much harder. Then you will see the dollar coming up a little bit and gold dropping significantly more. Right? This is called relative strength, the combination of relative strength in combination with the correlation. By default, this has nothing to do with strategy. Okay, this has nothing to do with your executions, your risk to reward ratio, your point of interest. This all has to do with understanding how markets move. Now, dollar, gold, dollar, major currencies, major pairs, okay? Another layer, if you are trading currencies, then this is a must-have you should know about. If you understand how the correlations work, we understand dollar index up, currencies down, okay? Now, what happens if the dollar index goes up this much? EU goes down this much, but GU goes down this much, and the dollar finds resistance. What is the best potential long setup on either EU or GU? Let me know in the chat, please. EU, baby. You get the point? Exactly. That's it. Dollar index down, EU goes down, GU goes down more. What happens if the dollar finds resistance and starts reversing? There is a bigger chance that EU will start coming up higher than the pound is, all right? That is what we call relative strength. Is it perfect? No. Is it significantly accurate over time? Absolutely. Absolutely. So understanding relative strength will significantly improve your overall success by default. Why? Because you're always filtering out the best potential instruments or setups. If you just trade gold, that's fine. But at least understand the dynamics between the dollar and gold. So you understand if you should be looking for longs or if you should be looking for shorts. Yeah? Okay, let's get back to work. Okay, perfect. Dollar dropping, dollar breaking, 12-hour supply, guys. Coming next towards coming to our next zone. Next 12-hour demand. Sorry, not supply, demand. Demand has been taken out here. Okay, that means we have one 12-hour zone left, sitting right around here. This is an obvious zone. It's a clear zone. We are 20 minutes away from the New York Stock Exchange open. Okay, this means gold is breaking or trying to push up higher. This means that this is not going to work out here. All right, this is not going to break the highs. If the dollar keeps dropping, it's not going to work out. We need to see a break above for us to see that. That can only happen if the dollar bounces, for example. All right, so this is the most interesting part now. Dollar coming down here. To be really honest with you, where is the... gold is still below that range. Dollar finds support very soon. Euro... they're all pretty much back at initial ranges here. So yeah, dollar needs to find support. Fight says, Lorenzo, show us an LTA analysis example for a clean chart from A to Z. All right, my friend, if you want to, pick any instrument. Any instrument. Any time frame. And send me location. Lorenzo, 8-hour demand zone is in gold is also a perfect range setup. I do agree, but the problem is that yeah, I actually do agree. If gold gets there, yes. But right now, at the moment, we're trying to break out higher. Let's say that gold breaks out. Dollar is weak. Gold breaks out. It breaks above that range. Then that's obviously going to be a long right here. You know, it could even be at 36.48. We break down. We create a semi play. And we break up higher. If gold rolls over, it could be a short setup, but it's just, for me personally, too risky to take shorts here. Even though I see the breaker. This looks more like we're just building a major. We're just going to break out soon, to be honest. It really looks like we're going to break out eventually here. I think gold is holding up way too strong. Even the dollar pushes up higher. Way too strong. Way too strong. This is the range. So this is the magic range we are looking at. That range will help us tremendously. Relative strength, baby. Relative strength. So freaking powerful. It's ridiculous. If you understand the term relative strength and you're patient enough, why not look at the current weekly fixed range? The current weekly right now is here. You can see the levels right there. It doesn't matter because it all has to do with this internal range anyways. You're going to get the same confirmation. That's the main thing here. So yeah, break, retest, a continuation longs is what I really would like to see here. If you roll over, then you would see something like this happening here. Then you want to see a confirmation from this range. Let's see what the guys are looking at. We have Christian. This is my fellow Dutch guy. He's always on point. Then we have Liam. Liam is from the UK. He is absolutely crushing it right now. His accuracy, his consistency has been through the roof lately. Then we have Ronak. This is my Indian man, my Indian G. This is my Indian G. Ronak's looking at the pound against the US dollar. It's actually kind of interesting. The pound Sunday open break. That's actually very nice. I'm actually kind of curious right now. How was your third quarter of the year? When I say third quarter, I obviously mean July, August, and September. How's it going so far? Because the summer months for many people are usually the hardest months to trade. Usually. For me, I did much better this year than I've done in 2024 and in 2023. Honestly, best summer yet. Amen. Amen to that, my friend. Congratulations. That is really good. Yes, there were some moments. There were some Trump tweets here and there. I get it. I get it. But overall, I think the price action was relatively clean. Even though we had to deal with a lot of internal fluff. We call that internal fluff. It's when price is not trending, specifically on the dollar, but it's flattening, it's ranging. All right, that's the key difference between trending, momentum, strong, clean, volume, and fluff. Right there. However, there were some really nice internal confirmations. We just had to adjust a little bit. It was doable. It was doable. It was doable. This leads me to, another discovery that I found out at, I think, quite quickly. And that is that markets change, market conditions change. Seasonality is a real thing. There are periods of high volatility. There are periods of low volatility. The key difference between that is that you have to understand how to trade and execute during these different periods. Your goal as a trader can be, I'm going to trade the same way no matter what throughout the whole year. If you can do that and in the long term, you're going to be profitable, sure. But if you have more of a discretionary kind of strategy, understanding the market conditions, understanding when to get in, when to get out, what kind of strategies you need to develop or how your strategy needs to adapt to a changing market condition is very important. Most traders fail is because they kill it when there is a specific type of market condition. And then what happens is the market changes, the market conditions change. And what happens? What worked beforehand suddenly doesn't work any longer. So understanding what these market conditions are and how to adapt to that, freaking next level. If you get that, that takes time. That truly takes time. And this is why I believe that becoming profitable, regardless of the effort from your mentor, regardless of who you follow, who you listen to, getting that perspective is something that no one can teach you besides yourself. No one. I can teach you experience. I can teach you pattern recognition. I can teach you, things that you have seen happening over and over again. Lorenzo, check the dollar Swiss. Yeah, dollar is at the POC, but it's below the Sunday open. You have that range. I must say it looks pretty bearish. It does look bearish. If you break down here below the fixed very low, there is just a larger chance we're going to see price coming down again. I agree with you. I agree. In 10 minutes, we're going to have the New York Stock Exchange open. I hope to see some volume. I hope to get into a critical level. If you do manage to come up higher again, like the dollar is used to, this setup is still extremely valid. We break above the range, pull back, and I will probably enter around this level. Stop loss below the range. And target it 2 to 1. Which is this range right there. So every target makes sense, okay? I'm not just going to put a 2 to 1 risk reward ratio, guys. When we trade live on stream, I'm not going to put a 2 to 1 risk reward ratio or just randomly on the chart. Oh, because I need to reach my 2 to 1. And I need to understand exactly where my macro target will be, because if I don't know where my target is, I could put my target into a major area of resistance without realizing it. So your target has to make sense. If the target doesn't make sense, I will usually not take the trade. That's not going to work out long term for me. In this case, that's a perfect target, right? You pull back towards that previous range right here. One example. Lorenzo, I was going really good on gold. I had a 66% win rate. I took 103 trades. My risk to reward was 1 to 2.6. And now I'm struggling. It looks like the market changed the last weeks. Did you mention a change in the market? Well, number one, bro, we have seen a major breakout. I'm not sure if you've seen it. But gold broke out of a 4 or 5 month range. That's the first sign. You know, we're no longer ranging, we're trending. So that's one layer. So I'm not sure exactly what your strategy is about, etc., and how you execute your trades, and what your requirements are. So if I could understand that, then I could give you a much better answer. But like, the market conditions have changed for sure. Gold has shifted right now. Gold has been pushing up much higher. But what I like about what you're saying here is that you already exactly know your win rate. You know built on how many trades it is. You understand your risk to reward ratio. I like that you understand that data. I like that you understand this. Most people don't even understand this. Most people in the chat, to be honest, have no clue what their win rate is. Actually is. They just throw out numbers. Yeah, 70%, 80%, 66%. Yeah, okay. How many trades? How many trades were exactly the same? Following the exact playbook type of entries. What is your win rate on, your playbook 1 model? Who recognize themselves in this? Let's be honest. Who recognize themselves in this? And it's really good to have that self-reflection, because I think that's the #1 priority in trading. I'm trying to work on that in real life all the time. It can always improve, right? But it's easy to become lazy in trading. It's easy to treat trading like a video game. It's easy to treat trading like it's something you just do, while you're scratching your left ball sack. That's just... Woo. Which is better, day trading, scalping versus swing trading? What do you guys think? What would your answer to that question be? Day trading, scalping, swing trading. Bob says scalping keeps your hair. No, definitely not, my friend. Definitely not. You go bald from that shit. You go bald. From scalping, instant hair loss. You just need to find what's best for you. Yeah, 100% right here. Some guys are just made to swing trade. Some guys are just made to hold trades for a longer period of time. Not take as many trades. To be really honest with you, a lot of swing traders right now are struggling because of the market dynamics here, okay? It's just the reality. If the dollar is not moving much and we're ranging at major key levels, gold finally broke out, okay? But for the rest, swing traders, they need to be extremely patient. Extremely patient. Including myself, by the way. I like to swing trade as well on the side. I swing trade with my personal capital. I like to take trades on a big account, and I like to just take big trades when I believe in something that I understand. But I haven't seen a really good signal since, I don't know, March, April. So yeah, then you have scalping. Statistically speaking, most people lose money through scalping. That's just a fact. Because it's so easy to lose control and not stay disciplined. Because it's just a quick scalp, right? It's just a quick scalp. And then you have the day traders. The day traders are guys that, you know, they're taking one trade a day. If the market gives them something correctly. In my opinion, it's the perfect balance. It's the perfect balance. That's what I've personally experienced. What's better, New York pre-open or open? It's every time is different. There is no better. It depends on volume. Like when does volume come into play here? How is the market set up throughout London session? How did London develop? you know. Look at GU, same freaking level, same rejection. Where is this song coming from? What? What? I'm confused. Yo, listen, I'm not dealing with music right now. I'm not dealing with any music right now. Aha! Got you. I found it. Damn, I thought I was hacked for a second. I swear I thought I was hacked for a second. I really, really thought I was hacked for a second. Okay, we're back. Cool. Dollar still coming down. Gold is, you know, it's getting rejected there. Like we talked about, the range got rejected, fixed very low. It's now pushing up a little bit. Nothing too clean. Like the only one that I think could look clean is the Swiss franc. The Swiss franc could break down, and that could form a setup here. Okay, if the dollar decides to roll over, this could be a clean short setup for further continuation to the downside. That's something that I would definitely look at. If we break down here, we break below the fixed very low at 0.79689. If you break below that, I will be definitely looking for a continuation play. That is if the dollar decides to find support or roll over here. Copyright, yeah, whatever. Whatever. Copyright, yes. Probably. Probably. Pound. Hmm. Let me actually check this right now. Weekly supply. Daily supply. Daily supply. Whoa. Internal range. Christian, you're a legend, my friend. For clarification, Christian is looking at the Canadian dollar futures. That is the dollar cat. That is the dollar cat. That is as clean as it can get. Shout out to you, my friend. Christian, my boy never disappoints me. Honestly. Never disappoints me. If the dollar rolls over, entry, boom. Shout out to Christian. Yeah, never disappoints me, my friend. Wow, so clean. Beautiful. Okay. Cleaner than the Swiss, in my opinion, right now. Swiss looks good as well, by the way. Cleaner than Swiss. There is just a chance that the dollar will hold. The thing is, the dollar is holding. The dollar broke down CPI, correct. But the dollar is holding, okay? We are already at the New York Stock Exchange open here. No more crazy volume. We're holding support. We're not breaking through. And even if we would break through this low, we would still have that 12-hour demand sitting right there. So gold will have a difficult time breaking out to the upside here. So this leads us to currencies. And the only thing that I would say then, if that's the case, okay, is a breakdown for the dollar cat. If the dollar decides to break down, the cat is the only way to go. The cat is holding up really, really, really well. That means that the dollar cat has that potential break here. I like this a lot. I like this a lot. Christian says, time to show YouTube the Canadian dollar trend. I think you're right, my friend. You're right, my friend. Let's go to the Canadian dollar trend of Christian right here in our VIP. Boom. Good morning, LTA. After last Friday's volatility, it is time for an update. I'm currently cautious with shorts for the Canadian dollar futures, right? That's important to understand. That's the opposite of the dollar cat. Why? The three participants are at a 26-week extreme. Right here, the CUT data is showing us that the commercials are bullish. Retail is extremely bearish positioned. And while retail is extremely bearish positioned, we are in weekly demand. That means in the dollar cat, we are at weekly supply. We just talked about that. Weekly supply. True, true. For open interest, while price is in weekly demand, because the open interest is low. If the open interest is low, that means that there are not many orders getting executed. So what the hell is going to try to break that weekly demand when there is not less interest here? That usually leads to reversals. That's a very good point, my friend. My question now is, how does price develop next week? And I'm mainly talking about the dollar right now. What happens if price goes back to that weekly demand? What happens when price gets to the previous weekly POC? Look at the Canadian dollar, there are several scenarios. Price opens bearish, steps into the previous weekly POC, moves higher in conjunction with a bullish dollar development. Let's go the other way around. Bullish opening for the dollar. Yes, you are definitely onto something right there. Beautiful analysis from Christian right there. These are the LTA standards, okay? When you are in the VIP, These are the LTA standards. We're talking macro to micro. We're talking about that full-on macro fundamental approach right here, all the way down towards micro execution, right? Macro fundamentals, macro technicals, in this case, weekly supply and demand, micro execution. So yeah, you nailed it, my friend. Absolutely nailed it. I agree with you fully. Canadian dollar is by default super interesting if you break down. For sure, for sure. In my opinion, the VIP is not for beginners. It's not for beginners. It's for guys that, you know, have, you know, want to cut the chase, want to get straight into it, but we prefer, to be honest, to not have any real beginners in the group. We have our accelerator for that, where we just constantly talk about setups. But a full breakdown and full analysis like this in advance and then live streaming it in our VIP, we prefer really guys exactly understanding what we're talking about here. So no beginners. If you are interested though, and you say, okay, I got some experience, I have tried out multiple different strategies already in the past, didn't fit my style, I just couldn't make it work, couldn't make it happen. You can go here, click on the link right there and open a application form right here. You click on this link right there, you open an application form here, you fill in this form, and then someone in our team will get back to you. Okay, this is just to verify a couple of layers, a couple of things here, which will help us tremendously. Christian, my friend, we're gonna keep a close eye on you right now. You know that, right? We're gonna keep a close eye on you right now. Yes, sir. Awesome. Very good. Lorenzo, watch this video. It's about best trading entry model. Which one? Is that about it's probably ICT, right? Probably ICT.
You can teach the lowest IQ person an OTE because it's removing the PD arrays and its levels 62, 705 and 79. When it hits the 62 level, that's it, done. Stops at the 1, TP minimums at the 0. It's the most like a black and white entry. Like if you mess up on OTE, something seriously wrong. OTE is the only thing you need. You can teach the lowest IQ person an OTE because it's removing the PD arrays and its levels 62, 705 and 79. When it hits the 62 level, that's it, done. Stops at the 1, TP minimums at the 0. It's the most like a black and white entry. Like,
sorry, I can listen to this shit. Sorry. I can listen to this shit. I don't even want to defend this shit. I cannot even talk about it. He literally says Fibonacci pullback 61, take a long, target with the 0, stop loss there. Is that it? Is that literally it? I truly hope the message is, you know what? This is just for the beginners to just get a hang of trading, to stick to something consistently, because they understand, or he understands, that most traders are not consistent anyways. So, you know, the fact that they can just stick to something, you know, that's just super simple, allows them to improve over time. I get that part. But which swing? Which swing we're talking about? Like, what is the macro structure like? There's so many, too many open-ended questions there. It's just not possible. Freaking 10 million a month. Yeah, right. The thing is with like the words of wisdom, right? This guy, he got a lot of backlash, right? For the fact that, you know, all the traders that came on the show at the beginning were all not verified traders. They were all traders that pretty much, you know, came on his show and they just talked a bunch of fucking bullshit. Then he realized, shit, man, I need to have verified traders on the show. Regardless, I need to get guys on the show that actually know what they're doing. So then he started to get all these, you know, real hedge fund managers on his show, etc. It might be much better. However, the problem with that is that a lot of these hedge fund managers don't relate to us. They just don't relate to us and to how we trade. They always have a completely different approach to the market. It's something that we usually cannot really implement. So they end up always talking about the psychology of a trader. And I've heard that shit now over and over again. Like, I personally don't learn something from it anymore. What I would love to see, truly, what I would love to see are obviously verified traders that exactly know what they're doing here, that are actually a little bit, that, you know, are truly retail orientated. There are many of those guys here, okay? There are many of those guys. Right now, you can see that definitely a lot more guys are coming on his show that are actually, you know, better, finally, which is good, which is good. Which is good. Vicky says, we need to get some woman on. We don't do all this. You know what the thing is? And this is crazy, right? We had some women, or I have some women here in my group, and they're usually better. For some reason, and I can't explain the reason why. You tell me the reason why, but they're usually better. I don't know what it is. Maybe they're more patient. Maybe at the beginning they are too patient, but they learn to be more proactive, which is better than being too proactive and too less patient. Maybe that's the difference. Maybe that's the reason why they just are naturally just better. I think it has to do with their level of patience or something like that. I don't understand it. I don't understand it in full. We have Vanessa. She's a woman in our group, and she's a true she's a true warrior. She's one of the best, well-spoken, really educated, follows exactly what we're saying, step-by-step process, follows the system, just does it. She just gets it from the first time. She just gets it. But there are definitely there's something around it. I don't know what it is. I don't know what it is. I think us, man, to be real honest with you, we can get cocky very quickly, right? We can get overconfident. We can get greedy. You know, we want more. We can get into that flow very easily. We start winning. We start enjoying. We start, you know. Yeah. Slow markets, guys, again. I'm telling you, I'm actually telling you, we are getting ready for Q4. Q4 is where it's gonna be. Can guarantee you here. June was not the best. July was much better. August was actually surprisingly good. September, we're gonna find out now how the volume is, because if there's news in CPI and price right now is exactly at where we came from during the CPI here, that by default should tell you already enough. Where did you learn your strategy? Yeah, so let me tell you where I learned my strategy. I learned my strategy by a lot of trial and error at the beginning. Someone told me about the volume profile. I found it very interesting. He told me about understanding the real orders in the market, real executed orders in the market. And you could see exactly where within a certain time period or a certain range, the most orders were executed. And that by default, that's the real support and resistance. That's all on the lower time frame. Market auction, buyers versus sellers, like a true war zone. Whereas on the higher time frame, it is much more about larger accumulation and distribution that takes place. So if you understand the larger accumulation and distribution, which can refer to some macro fundamentals, macro technical supply and demand, you understand that on the higher time frame. But you also understand the lower time frame auction marketplace, buyers versus sellers, areas of interest, the real support and resistance, and you put that together and you find a way to bridge that gap between larger accumulation distribution, lower time frame market auction. That's where the secret sauce is. That's how LTA was born, because we managed to fill that void. Also keep a close eye on the Swiss franc. It is stronger than the CAD. Yeah, we will have a very close eye on the Swiss as well. Swiss franc and dollar Swiss and dollar CAD. Yes. Thanks for sharing, by the way. Thanks for keeping me sharp here. Very nice. Dollar CAD is holding up. Gold pushing up again. There is no break out there. Gold is just ranging. Nothing on gold right now. Okay. Unfortunately, for the gold traders here, flat. Flat, 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 flat. Yeah, a lot of guys are focusing on either the lower time frame and on the higher, and they forget about the higher time frame, or they focus on the higher time frame, but they forget about the lower time frame. If you are a swing trader and you want to trade on the higher time frame, you don't really have to, you know, look at the lower time frame. But if you are trading the lower time frame, in my opinion, it's extremely important to understand the higher time frame and how the higher time frame moves with or in conjunction with the lower time frame. That's the key difference. Many guys ignore the higher time frame. They think it's irrelevant to them because they want to execute trades. And I get that. But the higher time frame is just as important. Right? When I started trading, I probably in the first 1 or 2 years of my trading journey, I probably never touched the weekly time frame ever. Which is ridiculous right now if I'm looking back at it. But in the first 2 years of my trading, I never even looked at the weekly time frame. Yo, this is starting to look good. Dollar Swiss is breaking below our most important range. Dollar CAD 2, it is breaking. Is the risk to reward positioning good here? Let's see. Price. It seems to be good. It seems to be actually really good. It seems to be good. It seems to be good. Dollar CAD, sir, please check this out. Dollar CAD is also getting there. Dollar CAD is also just as clean. What I like about the dollar CAD so much is because the dollar CAD is in that daily supply zone. Look at the daily candle. And look at that rejection at daily supply. And then internally, we talk about this all the time. This is actually a perfect example of higher time frame supply and demand, macro fundamentals as well. We talked about that, or Christian showed you, with lower time frame market auction, right? This is a perfect example. So macro supply with a CME play coming to fruition right now. This is the consolidation. This is the manipulation. In this case, you manipulate into higher time frame supply. You break below that range and you turn that range into resistance, which sets in a lower high followed by a lower low. Your target then, or at least the target I will be looking at, will be, for example, the current weekly lows. The Sunday open is there as well here, so that is definitely something to pay attention to, be a bit more cautious with. But overall, that is also a perfect test for rebounds here. Dollar Swiss, very similar. The difference with the dollar Swiss right now is that dollar Swiss is more or less getting rejected here on the daily. same thing. There is no clear demand zone here. So that means that, you know, because of that, our first demand zone is literally sitting right there on the 12 hour. That's the first demand zone that comes up here. Well, that's clearly right at our target, right? If we would trade, we would take that short setup, we would take that towards that 12 hour demand zone right here, which then aligns perfectly with our risk to reward ratio. But our stop loss will be above this range. You guys follow me on this? Let me know. If you have any questions, let me know also in the chat. But these are everything I'm talking about here is textbook. It's textbook. 2-to-1 risk reward ratio, critical. Why? Because it allows you to win only 40% of the time and make a bit of money. 50% become profitable. 60% become really profitable. So it gives you some freedom. It gives you some work to do here. And again, why do I like the 2-to-1 risk reward ratio so much? I like the 2-to-1 risk reward ratio so much because usually what tends to happen throughout a New York session is that what I found out, it's not about getting the highest risk to reward. Why? Because the amount of losses you're going to encounter, it's going to be really hard for your psyche, number one. Beginner traders should, in my opinion, never focus on high risk reward ratios. Why? Because they will probably, you know, there are going to be periods where you're going to lose 7-8 times in a row. If a beginner loses 7 or 8 times in a row, guess what's going to happen? So that's already the wrong start. You agree? Then you have guys that are trading the 1-to-1R setups, okay? Or the 0.8, 0.9, right? That is fine. The only problem is you cannot really build that momentum. You need to win a significant amount of more trades than you lose. But it also doesn't allow you to have any room for error. Because if you don't have any room for error and you create error, you're going to lose money as well. Okay? So the perfect hybrid that I found was the perfect combination between the higher and lower. That is a 1-to-2, sometimes a 1-to-3 if that's possible, if it makes sense here. But that's usually what I'm looking at. Now, another question is, what about stop loss placement? Because stop loss placement is crucial for you to understand. Your stop loss should be where it should be. It should not be randomly located. It should not be as tight as possible. It should also not be as wide as possible. It should be where it should be. Okay? Now, what I found out is that with ranges, it's very easy to put it above a previous range. So when we talk about a CME setup, that's a specific playbook setup. The goal is either an entry model confirmation with our stop loss above the entry model or discretionary above the previous range, as long as the target allows you to do so. That's the second rule. Your stop loss needs to be where it needs to be. Then your third rule is the rule the rules. The rule the rules. And that is what we call the average daily session range, okay? New York sessions, London sessions, and Asian sessions have an average expansion period, an average range. The amount of pips on average a session does over the past X amount of weeks. You will quite quickly see throughout a session what, roughly speaking, the average expansion period is during a certain session. The combination of that is something that you could take in consideration when you execute a 2-to-1 risk reward ratio, right? So I found out with a 2-to-1 risk reward ratio, it meets all these requirements because my stop loss is where it needs to be. The average range allows me to take a 2-to-1. I'm not being too greedy, right? I'm not being too cautious. It seems to be the perfect hybrid for me to allow myself to execute trade positions, okay? And number 3 is pretty much what we call the data itself, right? History of trades, executions, data. This is why we utilize a 2-to-1 risk reward ratio. And this is why we have been highly successful with it. And the moment we introduce this to our community, the 2-to-1, and we said, you know what, guys, focus on a 2-to-1. See and expand later on. See what you can do after that. Maybe you can go to a 3-to-1, a 4-to-1, a 5-to-1. Start with a 2-to-1 right now. And let's see what your results are gonna be here. Let me know here. Everyone who's in the VIP right now and who is in the chat on YouTube, verify this for me. How much implementing the 2-to-1 risk-reward ratio has changed your trading career forever? So in this case, the Swiss franc is breaking down, okay? The dollar CAD is still holding at the fixed very low. Do you see how these levels work, guys? Do you see it? Why is it that price perfectly bounced from this red line right here, the POC? Right there. Why is it that right now we are perfectly bouncing from the fixed value area low, the value area range right there, on the dot? Why is that? Ask yourself the question, how is it possible that that happens, right? Over and over again. There is no order block there. There is no fair value gap there. There is no clear resistance level there. Why there? Roxanne says, watch this video right now. It's about the breakouts you talked about beforehand. Okay.
This is my ideal trading setup, and it's what makes me the most amount of money. First, you're gonna find a chart. Mark the recent high, then mark the recent low. What we want is for price to do a liquidity grab in either direction. This should be a weak break, meaning a candle wick should only go through this liquidity and the body closes above, just like it did here. Once that happens, we look for price to break our next point of liquidity in the opposite direction. This time, it should be a strong break with the candle closing above the liquidity. Going back to our example, that's exactly what happens. While doing so, it also created a fair value gap, which is exactly where we'll be taking our entry. Wait for price to come down to this gap, enter as soon as it does, set your take profit and stop loss, and that's why this is my
It's just a CRC, by the way. That's what I'm seeing right now. It's just a CRC. But overall, I think he's correct. Right? We want to see a strong breakout. A strong breakout is so much better than a small closure below, or whatever the case may be. Whenever you have a small breakout, retest, continuation, I do believe that it's just going to be more and more beneficial overall. I really do see that happening here. Yes. I agree. I agree. Strong breakouts. Right now, dollar CAD, strong breakouts. What's the trade setup? Any retracement, entry, stop loss above. So entry 079684, stop loss 079851, target 079367. Dollar CAD is holding above, no closure, no breakout, no confirmation. Dollar Swiss seems to be weaker than the dollar CAD. So dollar CAD is still nice though, it's still interesting. Sir, I want to backtest LTA concepts on the 5-minute time frame for marking supply and demand zones. Which higher time frame would be the best? The 1 hour, 4 hour, or the daily? So the first thing is, bro, the hourly time frame is not a higher time frame. The 4 hour is not the higher time frame. You get taught this. You get taught that the 1 hour is the higher time frame. The 4 hour is the higher time frame. What I would consider personally higher time frame is anything above 8-hour absolute minimum. But for me, anything above the daily time frame is what I would call the higher time frame. Okay, daily, weekly, monthly. Then we have the 12-hour and the 8-hour. I don't look at any supply and demand zones on the 4 hour and on the 1 hour. The only thing that I care about on the 1 hour or the 4 hour is where we are against the previous weekly trading range and the intraday trend. If I understand that, this is not always the case, but it's one of those. Previous weekly trading range or intraday trend. If you're in a trend, clearly. If you're in a range, consolidation, you need to see what happened last week. Where are we standing? We're trading against last week. So intraday is where it's at for us, okay? When it comes down to your volume analysis, yeah, you could go to 5 minute. You could go to 5 minute. We can't access your indicators, smart money indicators. The smart money indicators are only for our VIP. Regardless, if you don't have access to the tools here, Telegram is a perfect example because we have our traders talking about the indicators. The reason why we don't want to give the indicators to everyone is because they just, you know how it works. You give them an indicator and what they're going to look at is this, right? They don't understand the nuance. They don't understand the context. That's the problem. So you give them the indicator and then they say, oh, so I need to buy here and I need to sell when this thing is here, right? Or when this red line is there, I need to sell. Or when this green line is there, I need to buy. Like that's what happens a lot of the time here. They don't understand the nuance. They don't want to put in the work. This is the reason why we only give it for the VIP. Now, a solution to that is our Telegram channel. Our Telegram channel allows you to still get access to the data given by some of our traders in our group. The DNSs do it for you. And they give you the macro breakdown, the macro analysis. So if you are interested in joining that, I highly recommend to go for the Telegram and get into our accelerator program first. Because this is where you don't get access to the indicator, but you still get access to the data, to the information, or at least some of it when taking trades or whatever the case may be. So you simply click on this link right here. You follow the, you pretty much go here, you click on join our private LTA Accelerator Telegram community. You click on that. You follow the step-by-step process. You talk to us here. There are two ways that you can join us. You can pay us a one-time fee of $400, which gives you lifetime access to our Telegram group. Or you sign up with Vantage, which is a trusted broker that I've been using already for years. Pretty much all our community users are using Vantage. You deposit $350 on your Vantage account and you learn LTA. You study the book together. You learn LTA, you take trades from that account. We obviously earn from that money. Okay, we obviously earn from that trading account in commissions as well here. All right, so you can decide to keep the money for yourself, deposit that money on your Vantage account. But if you say, I have my own broker, I want to do my own thing, then do that. And you can pay us a one-time fee. So you can pretty much decide what you want to do there. Okay, I think our setup is ready in case. Lorenzo, are you following the news regarding Nepal? No, there's so many things happening, bro. I can't keep track anymore. Honestly, it's getting out of hand right now. We all know what happened yesterday. If you don't know, you've been truly living under a rock. It's like, it is nasty, my friends. It is nasty. I was pretty shocked, to be honest, when I saw the video. It was truly shocking. Truly shocking. It really hit me different this time. It was something else, man. Don't want to go too deep into it here. But anyways, conclusion, right politician got assassinated pretty much in front of thousands of people. Sniper, 200 yards away, boom, straight up to his throat. That. And the crazy part, people were cheering. People were freaking cheering. Think about that. That's where we are right now. It was sickening, guys. Absolutely sickening. Don't recommend you to watch the video if you haven't seen it. It's nasty. You don't want to watch it. You don't want to watch it. Someone says, hey man, love your work, G. Just to ask, why don't you use or include the VWAP to your strategy? That's a great question, my friend. The reason why I'm not using the VWAP for me personally is because I don't need to. I don't need this as an additional layer. We have our key levels. We have what we call volume and price. The average weighted volume and price is for us just not necessary. We don't need it. We don't need it. It hasn't been helping me with increasing my success rate. You might be able to use it on the 5 minute. If you are really on the lower time frame, it might get more useful to have the VWAP as like an extra confirmation. If you're more on the lower time frames, the 5 minute time frame. But anything around the 50 minute, you know, in my opinion, it's not really it's not really necessary. It's not really necessary. Take a look at gold. Gold is pushing, yeah, but it has to break out. You know, gold is setting up for something bigger. Gold is holding up way too strong. Look at this 8-hour zone here. Look at how we're holding up that 8-hour, higher time frame, daily support here. Look at how we are in essence kind of creating what some people would call, you know, a bull flag or something like that, where it's more about something like, you know, we're breaking, we're setting up for potential continuation push. I think shorting this is extremely tricky. Like I said before, when gold is in a macro uptrend, things can go. Regardless of the dollar, things can just continue to go up for a while. What needs to happen for me is a break above this range, testing this range as support, then I'm entering a long position, especially if the dollar maintains weak. Dollar cat, there we go. Dollar cat still there, breaking below. This is a beautiful setup. That's all I can say. Dollar Swiss is going. We're not really seeing that pullback happening here. Sometimes that happens. Sometimes that happens. Sometimes it happens that you still see a pullback later on. So that's true. Here it was perfect. Price broke out, pulled back, continued higher. It's a perfect example. I would set an entry there, a stop loss there, target there. Dollar CAD is currently breaking out. So let's see where we close this 30-minute candle as well. Similar setup. You would say so. I would love to see rejection here and then a follow through. In the meantime, guys, let's make sure that we smash up that like button here. We have around 500 people watching. We have 238 likes. I think it's time for, you know, I think it's time. I think it's time. What do you think? Let the algo do the work. The rest of the work. No one says you don't think that the monthly candle is going to finish red this month. No one knows what is going to happen, my friend. Your name literally says it all. Your name is no one. I tell you, no one knows what's going to happen this month. You get the point? Confirmations, confirmations, confirmations. Scenarios, confirmations. Anticipation. No one truly knows what's going to happen, right? This is just the reality. People have. This is probably the biggest misconception in the market. People have a feeling they understand what's going to happen. It could close red. It could close green. It could be a doji. It could be a strong bullish candle. No one knows what's going to happen. We'll see. We'll see what's going to happen here. It doesn't matter. It doesn't matter what's going to happen. We'll be finding our entries anyways. Lorenzo, do you think the pullback is coming? I'm looking at it right now. I hope so. I hope we're getting a pullback. I hope we'll get into that level for a rejection, a lower high. I hope so. Yeah, I hope to see that. There's still movement. The market is still moving. It doesn't, the volume is still kind of there. So it's not bad. Chris says, yo, checked out how to trade with $100.
Put that $100 that you had before, this is where the 100 comes into play, into a live account and just start risking $1 per trade. Okay, so you have 3 months of profitability on demo. So you know that you're doing pretty well with trading now. Boom, jump over to a live account with still pretty much like demo money, because $100 to you at this point, you got a job, you're paying off your stuff, you're chilling. $100 shouldn't be too much to you at this point, right? Toss $100 into a live account, and then what are you going to do? Same thing, rinse and repeat, the same thing that you did from the demo account. Just prove to yourself that you can be profitable over the course of 3 months. That's 6 months of trading just to prove to yourself that you're profitable. Put that $100 that you...
I think that's freaking valid advice. I think this makes a lot of sense. It's not about the amount of money you're going to make. It's truly not about the amount of money you're going to make. You can put $1,000 if you can afford to put $10,000. Risk $100 per trade. Yes, sir. But it's about that consistency. I truly agree with him. That's just the reality, right? People are obsessed with making money too quickly. Whereas the reality is you need to get that exposure, get that consistency, gather that information, gather that data, stick to your strategy. Test, optimize. I like it. I think it makes a lot of sense. Dollar cat. Ooh, look at that. 3 minutes to go. This is why we talk about a break and retest. Break and retest. No one says it's going to finish red, left. Let's see what happens. If you want to know why no one thinks it's because you have an AMD PO3 situation, consolidation manipulation distribution. For gold, you mean? Yeah, so this indeed is somewhat of what we call that, power of three stuff. The only thing I'm saying is if we would break above this range, and we pull back to the fixed value area high, which is sitting exactly at 3650 right here, then I would look for longs for sure. If you want to know why no one thinks, because on a monthly you have an AMD, on a monthly time frame you're talking about. On the monthly time frame. Oh, you mean like you could say weekly. You mean like this is the consolidation, this is the manipulation, and this is the expansion. Something like this. Is this what you mean? The thing is, it could also simply be a continuation. And this will be my long setup for gold, right there. Above that high, good break above that high, retest. Then go for the previous weekly, the current weekly highs, right? Right there. Take this out. Right there. That is to me Amazing. Why? Retest, some candles showing us that we're holding support here. Stop loss below the range. Stop loss below the range. And then target a takeout of this high right there. Just go for that high. Boom. Because right now you're kind of in a range. Right now you could have that we start rolling over. We get to that 8-hour demand zone right here. We have that 8-hour demand sitting here on gold. Right? We could get there and we could then potentially look for, you know, a breakout higher. Something like that, for example. You don't want to long here, because if you long here, then what if you get rejected here? Right? So you're going to face this resistance here. You don't want that. It's going to be a headache. So the most logical move will be either that breakdown. Macro is extremely bullish still. Breakdown. Entry here internally. Or breakout continuation. Something like that this is what I would look at, for example, for gold longs, right? Only the breakout or the pullback. Some people are only waiting for the pullback. You know, what if the pullback never happens? You see this all the time. Guys waiting for the pullback never happens. Price continues to go higher. So you want to have that alternative, right? And this is why I really like the range plays here. Understanding previous ranges. The confirmations there. So I'm really leaning towards the dollar Swiss and not towards the dollar CAD right now. Why? Let me know in the chat, please. If you were watching here since, you know, an hour ago, we talked about the reason. We talked about it. Side says the way you draw makes it look very simple. Yes, just draw. Just draw, man. Just keep drawing. Just keep drawing. Alessandro says because price closed within the range. Stacy says because the correlation is better than the Canadian dollar. Relative strength. Stronger breakthrough price. Alex answered it perfectly, my friend. Stronger breakthrough price. Exactly. Exactly. Stronger breakthrough price. We said instead of having a closure below, we rather have a strong break plus retest, right? Well done, well done, well done. Thoughts on dollar tapping into demand? Good question. Now the dollar, in essence, what needs to happen on the dollar is that the dollar needs to, first of all, dollar needs to break above this high again. Needs to reclaim. It has a lot of work to do in order to call this bullish. Right now, especially because that first demand was taken out aggressively right here. You can just see that already. That first zone was taken out aggressively. We're now there. Dollar has a lot of work to do. So yes, you could see a bounce, could be. But dollar needs to just break back above that range again. It's gonna be heavy. Gold still trying to push higher. Lorenzo, what are some of the other streamers you're looking at? So to be honest, I've been pretty out of the loop. I have been pretty out of the loop when it comes down to streamers. I have no idea. I have no idea. There's so many of them right now. I don't know. A lot of them trade futures. A lot of them trade the Nasdaq. Not many of them trade Forex. It's hard. It's hard. I don't know. Lorenzo, if you want to monitor the CUT data without the indicator, what should we do? Well, there is something that I can show you that you can utilize regardless, that you can learn. Before we introduced any indicator to someone in our group, we always talked about the real raw data. And for some people, it's overwhelming. They don't understand it. But I think that if you understand how an indicator works, like, and specifically when we talk about this indicator right here, this is the smart money intelligence, right? The smart money intelligence shows you, for example, shows you the exact positioning of the retail trader, the commercials and the large speculators, right? The large speculators are the banks, the institutional traders. These are your large traders. This is everyone who trades with more than 100 contracts and hold on to their positions, right? So the large traders, you could say. Usually that refers back to the banks, etc., or just simply large traders in the space. All right, then you have the green line. These are the commercials. The commercials are the hedgers. It's a very interesting concept. The commercials is what we call the hidden liquidity. This is all macro. This is where we talk about larger accumulation distribution. It all has to do with these three different market participants. Okay. So when we talk about the CUT data, the commercials, we call them the hidden liquidity. Why? Because they facilitate liquidity to the large speculators, the large traders. Why? Because they hedge themselves, right? They're in the market not to make money, funny enough. They're in the market to trade and hold on to a certain asset. Okay? Easiest way I can explain this is as follows, okay? Just imagine that a company, right? A jewelry, I think that's the best way to explain it, right? Imagine a jewelry. And a jewelry, what do they need in order to make their rings? What does a jewelry need in order to make their necklaces? They obviously need something like a metal, gold, silver, diamonds, crystals, whatever, right? Let's say gold, okay? They need gold in order to make their rings, their gold rings. They sell that for profit, right? So what do these guys need to do? These guys that you see right here, this is the green line. This is why we call them the smart money, is because it's not the banks, it's not the institutions. We call them the real smart money because of the fact that these are the guys that are actually holding on to the asset that we're trading and talking about here, okay? If they want to buy an X amount of gold, they need to buy that gold in advance. They need to actually buy real gold. Right? That's how the market works. When people trade the markets, they don't understand that the markets are actually built upon real supply and demand dynamics. Like the markets are truly built around supply and demand, real supply and demand, right? This is how gold is going up. The demand is higher than the actual supply, okay? Now, in this case, when it comes down to gold, let's imagine them buying 1 kilo of gold. And that 1 kilo costs, I don't know, how much is it? $50,000? They buy 1 kilo of gold, okay? Now, what happens? Okay, and this is important. Imagine them buying 1 kilo of gold and imagine them turning that gold into a gold ring or multiple gold rings. They need to turn that 1 kilo into multiple gold rings in order to sell it for a profit. Now, what happens? Okay? If in that time process, from them buying the gold towards them making the rings, imagine if gold drops or the value of gold goes down by 10%. What do you think will happen with the company in the long term? I mean, they have small profit margins. They have employee costs. They need to buy and pay rent for the store. They need to monitor their storage. They have a lot of external costs, external fees. They cannot deal with the fact that gold would drop down 10%. Imagine that, right? Imagine if you buy gold, you turn it into the rings, you want to sell it for a profit, but your profit margin is taken away because the gold value drops with 10%. So what is the trick? What is that one trick that they utilize in order for them to still make money? It's freaking genius, okay? They open a short position on the futures market against the amount of gold that they're holding. Why are they doing that? They're doing that because if price is coming down, what happens with their short position? Their short position goes into profit, right? Because price is coming down, they have a short position open, okay? So they make money anyway. They are hedged. This is why we call them hedgers. So what do? If price comes down, they make money, and their value of their gold stays the same value no matter what happens. Why? Because if price would go up and they're in a short position, then yes, price would go up, but that means the gold that they're actually holding, that physical gold, also goes up in value. Do you see the difference? That is the key difference. This is why we have what we call the hidden liquidity, because their intention is not to make money from the markets. Their intention is to make money from the underlying business, which is their jewelry store. That's the reality. So you can't lose. If you open a short position and it goes down, you hedge yourself, right? You make money on your short, you still hold that same value. You sell your gold rings, you make the same amount of profit from your gold rings when you sell it in the store, okay? If price goes up, that's fine because the value of gold goes up. Yeah, your short goes in drawdown, but the value of gold goes up, so your profit stays the same. This is what large companies do. Large companies hedge themselves all the time in the futures market. This is why the futures market exists in the first place. So understanding how these guys are positioned in the market will tell you exactly what could happen next. And your question is, okay, why are they so important? Well, who do you think has more information about an industry than the person who's actively involved in that industry because they have running these underlying businesses in that industry? Like they have a jewelry store, so they are fully aware of the gold market from the inside out. They talk to other jewelers. They talk to whatever. That understanding is super important for you. And this is why that larger accumulation and distribution that we talk about is so relevant. This is why this data is so important, right? This is what we call the hidden liquidity. Why? Because they don't care about making money from the markets. But what they do is they do provide liquidity. Why do they provide liquidity? Because they still execute trades in the marketplace. We're going to go a bit deeper into it later on, okay? That's what the CUT data is built on. It's built to track each individual market participant. Commercials, the non-commercials, which are the large traders, and the non-reportables, which are the small traders. Small traders are usually what we call the retail traders, okay? Now watch what happens when the commercials on gold get to a bullish extreme. That means they are more bullish positioned against their average positioning, let's say. All right, so let's draw a line here. 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 This is when they get into a bullish extreme over time, okay? Look what happens here. They get to that bullish extreme. Shortly after, we break out to the upside, right? We continue the trend. Get to the bullish extreme. Short time after, we break out towards the upside. Get to the bullish extreme. Break out to the upside. All right? Get to the bullish extreme. Continue to break out to the upside. This is just how larger accumulation distribution works. And this is something that we look at. So larger accumulation distribution. But this is not necessarily something that I would trade. This is just something that gives me the understanding of the macro, the higher time frame. The execution happens on the lower time frame. So we're going to go much deeper into this. This is such an important factor to talk about, but this truly covers one of our assets, which is what we call the CUT data, and how that works and how that impacts the market, okay? And just for clarification, so you understand really how we, in essence, are looking at it. We have tested this data on every currency, every commodity, every indice. We have tested this data in our group everywhere. And we know exactly what works the best for what. What data is the most important data for us to look at. All right? This is why we have been testing everything, making sure that we know, what the actual win rate is over the last 10 years, 20 years, sometimes 30 years. And then it gives you a really good understanding of the higher time frame from that standpoint right there. Peter says, I don't get it. As written before, isn't it break even then? They don't care about making money. That's the whole point of it. That's exactly what I'm trying to say. Yes, they will break even. However, because they're holding gold, they're owning real gold, physical gold, they make profits over that. It's to protect themselves against losses from the market, which is genius. Large oil companies short oil, short the oil price, or suppress the oil price in some cases when they dig up a lot of new oil. Why? Because they are afraid that if they don't short it and the market dumps, that they go bankrupt. Because the oil price comes down too aggressively. If the dollar cat would break the low, would you go into the trade setup? Yeah, I think so. If the dollar would clearly break below and it would pull back into that level, I think there is definitely a nice way of looking into his setup here. You need to see a good break and a pullback, and then we go. Then I would definitely look for a short setup right there. Yes, sir. In the meantime, while we're waiting, I want to do a quick shout out to Connor, who passed his My Funded Futures account, finally breaking new highs, my friend. Congratulations. That's awesome to see. That is great. That is great news right there. This is a great example of literally what we just talked about. Liam, he shorted oil. Macro fundamentals showed us that the commercials were bullish, extremed. Large speculators were bearish. This is what we're looking at. We're looking at the large speculators being bearish. Macro technicals, higher time frame supply, rejection, and then the lower time frame consolidation, expansion, retracement, continuation. CERC. Entry, stop loss above the range. I mean, bro, that's clean. That's super clean, my friend. Congratulations. That's really well done. Okay? That is really well done. That is really well done. Okay? So what happens in the VIP? If you join the VIP, you will get access to all the indicators, but you will also get access to all the data. And I think, you know, indicators are one thing, but if you use the indicators, you need to test a lot of it. Take a lot of time for you. So this is what we already have done for you, right? This is something that I've been working on deeply, and that is testing all the necessary indicators so you know exactly what we're focusing on for what. And to make that even easier, we turned that into what we call an alert system. And an alert system allows us to see on the higher time frame, from a macro fundamental standpoint, what actually happens when we get into an extreme. For example, here we saw the British pound commercials reach a bullish extreme. Boom. That's a bullish signal. We go here for reference. It leads us right away towards the data. And you can directly see how important that data is for us to understand it, to take consideration. Because on the higher time frame, even in a macro downtrend, you can still see when this happens, short-term pullbacks occur over and over and over again here. So this is all the data that we look at from a higher time frame standpoint. And that alert system is something that we utilize in our VIP. With this data, we kind of set the foundation. We then look at the macro technicals. What happens then on the pound? You know, where are we in a demand zone? Are we in a supply zone? Do we need to break supply before we can continue to go up higher? This is the second step. And once these two are nailed, this becomes extremely easy, right? Any CME is looking for longs. That's our entry because we know that that will give us the higher probability. Any CERC breakout retest will give us over time the higher probability because this is completely nailed and automated. All right, so that is what we do in the VIP. That's pretty much how we go through the markets. We open on Mondays, we go to our weekly analysis, we then look at our data. Okay, right now we are kind of waiting for that shift to happen from a macro fundamental standpoint. So we're kind of waiting for, you know, Q4 to start. So then it really, you know, we expect an expansion phase. That's where a lot of money will be made throughout what we call that expansion phase right there. That is when you can really see an expansion happening and this coming to fruition right there very well. So we have our weekly analysis. We then enter the trading floor during London session. If you trade London session, we are in the trading floor, trading the London session. The guys are usually there. Otherwise, simply New York as an additional layer. It's really good because you have direct feedback of all the guys in the group trading and executing their positions right there. While at the same time, you can also watch the New York live stream. So it's actually the perfect combination here. So this is when and where the change comes into play here. Now, the reason why we say we're extremely careful with giving indicators to someone is because a lot of people take the indicators and they just don't understand the nuances. They don't understand our framework good enough, right? You need to lead them through that process first, right? So it's really important that for us as a community, that we cannot accept everyone in our community because of the fact that if you would do that, it would turn into a buy or sell, quick buy or sell community without understanding, kind of diluting the quality of our community right there. Okay. If you think, I'm ready, I have been trading for a while. I'm in this game for a while already. I've tried out multiple different strategies. I'm disciplined enough. I worked on my skills enough. I know where I am. I'm no longer a beginner. I just need that, I need that final push. Yeah, this is what you can do. You can open a application form in our description. You can click on it right here. You follow all the requirements. You fill in pretty much the form right here. A couple of simple questions, I guess, and then our team will contact you right there. Okay. In the meantime, dollar Swiss is pulling back. Yeah, good enough. Patience so important, especially during CPI here. To be honest, regardless, this is a setup that I think is just worth looking into because it kind of meets all the requirements, right? We break below the range, the previous trading range. We failed to break above the Sunday open, the opening price of the week. We actually tried to break above it and we failed. That's really bearish. That's usually a very bearish signal. There is no clear demand on the higher time frame until this point. So that will be our target. And that range is going to be a major area of resistance. We have another level in between. I mean, it's pretty clean. It's a clean setup. It's something that I could definitely put in as a limit order regardless and see how that plays out over time. Anyways, even if you don't see it happening on stream, it's worth, at least for me personally, worth to still look at. Is the CT indicator explained in the book? 100%. Everything is explained right here in this book right here. Okay, this is why you have your book. You can study it deeply. You can study it deeply. If you don't like to read it, there is also a really good trick that you can use. It's an app called... what's that app called? It's an app called... I think it's called Speechify, if I'm correct. Is it called Speechify? Anyways, you can upload that book into Speechify and it reads it for you, which is genius. It's really good. It's really good. Ramonda says, GJ, good example for the C or C in the 30 minute. We can check it out real quick, my man. I haven't really analyzed GJ a lot, to be honest with you. So I can't give you all the ins and outs. Right now, it seems that we're in higher time for resistance, to be honest with you. It is pretty tricky to me right there. It's pretty messy also, huh? Wow. It's pretty messy. Look at supply first. Supply, weekly supply, monthly supply. Monthly supply. It's pretty messy overall here. Yes, I see your range. This was a perfect example though. Look at this. Like this was a perfect example, right? You have this range. You have that pullback, you have that breakdown. And right now you're seeing the same thing happening pretty much. I see what you mean here. Price reacts. Pretty much that's the same thing here right now. So this is for sure where you're holding that that support. In the meantime, you know, price is kind of trending upwards, but you are facing major resistance. I would say the following, right? Let's say price will break below this zone. And it will turn both of these ranges into resistance. The chances that we can break below this, reject here, and take out the lows is so clean. So let's say you break below here. You pull back, you get rejected, you see that you're getting rejected. You create an entry model here. You simply target the lows. Why? Higher time frame resistance. You break the internal structure. You turn that range into resistance and you have the confirmation. So yeah, it could be that price holds here, price reacts here and goes up. But I prefer price to come down and simply do something like this instead. Does that make sense? Breakdown and then a continuation. I think that's the cleaner setup. You're in a range. You're in a range, larger range anyways. Your major resistance. I mean, seems to be the better solution here. I'm gonna give it around like what, 10 minutes, 20 minutes, 50 minutes, something like that, to see if price can push back. But that's regardless gonna be an entry setup that I would take anyway. So I would just mark this out regardless. If you agree with what I'm doing here, by the way, you just need to understand it. You just don't need to follow me blindly, by the way. Just please don't do that. Don't follow me blindly. Kind of understand exactly, you know, the thought process behind the reasoning. And then we can talk here. But overall, that's a setup that I would be looking at right here. Futures is at the very high. Yes, if it's already there, then sometimes you see that alignment there. Yeah. It's important to know. Okay. What do you think of the volume? Don't you think it's dying down? Yeah, bro, just in general, what do you guys think of the September volume in general? Let's be honest here. I mean, we got a couple good trades, but, you know. I think the September volume so far is extremely low, right? Let's be honest here. But this is going to change. This is all going to change in October. October, everything will come back. What do you do the rest of the day to keep yourself 100%? Well, number one, train. I train every day. I train every day, regardless. Right? So that's something that I do. Another thing is sunlight, man. Sunlight. Get some freaking sun. Honestly. If you can get sun, then I think it's just gonna change. If you live in a country where there's not much sun, regardless, then at least get outside. Just get outside. I think, you know, getting out of your house is a good thing to do. Coming back after getting out is a good thing to do. Staying inside all day is not a good thing to do. I've been doing this because my thought process beforehand was like, oh, you know what I'm gonna do? I'm gonna work my ass off and I'm gonna lock myself up in a room for 12 hours a day because that's how I'm gonna become successful. Well, it made me miserable, right? And I don't always have to be happy, but physically, you know, it had an impact. I had a lack of vitamin D. You know, my hormone balance was not good. You know, I needed to get out of the house. I needed to train. I need to come back with a clear mind, then get to trading. I need to do something before I get to the charts. That's the main premises. If I directly get into the charts without going out or doing something else, I usually can get more impulsive. Shower says, yeah, September is hard to trade. Seems like dollar cat is doing well. Yeah, dollar Swiss is also looking interesting. Dollar cat is still on the same page right there. I think these are the two trades, right? Dollar cat, dollar Swiss is something that you could look at. Well, it says it really is September. I'm doing terrible. Well, the thing is, bro, Don't think from this standpoint of like, oh, September is bad. You know, see this, the way I see it, see this as a preparation towards, see this as a preparation towards Q4. Get yourself ready now and prepare yourself for the next quarter, which is going to be the most interesting quarter because we're going to have interest rate cuts next week. After that, the holidays are over, the summer is over, people are going to go back to work. The volume will increase, all right? Volume will increase. So the main idea is that we should say, oh, September is bad. Or you say, you know what, I'm going to use September and I'm going to turn September into a preparation month for October, for November, for December. So this is what I want to do on stream over the next coming days ahead of us here. I want to make sure that everything that we do right now is pretty much properly explained, so you guys understand exactly what to expect once the volume, the regular volume of the market is back. Now, once the volume is actually moving again. Okay. If that's the case, I think you're gonna, I think you're really gonna benefit. And this is why we are trying week by week, we're trying to introduce you to something new of our strategy, at least, so you can kind of get the understanding here. So once October hits, right, you are fully ready. You are fully ready. You're ready to rock and roll. You're ready to execute trades with us live. You're ready to, because you don't have any more questions. You understand the strategy. You understand the nuances of the strategy, at least from what we talk about on stream. That is the goal here, all right? This is the mission that we're currently on. We're in the mission now to prepare ourselves for Q4, because it's not you, it's the volume. If there is no volume, if there's no tick volume and the market just doesn't move, yeah, it's like extreme patience is required, You're going to be stuck in your positions longer. There is chance of more manipulation in the market. We all know that. Less volume, more manipulation. All right? We're seeing this all this time here. August was surprisingly good, actually, in terms of that, even though the volume was also relatively low. The difference with August was, in August, there were periods where the volume was really low, long periods where the volume was really low, and then a large boom expansion, like sudden moves for a while, and then again, died out. Right? Large expansion. Whereas September is much more slower here. But also take consideration, the closer we're getting to the most important news of the quarter, which is the FOMC data, the longer, the slower it's gonna get. The slower it's gonna get. That's it. So we're on a mission here. Get you guys ready. And if you are committed to join me along the way with that, and you want to, see how we unfold LTA in real time on stream, type in LTA in the chat. All right, let's get ready for the rest of the year. Give it some time to absorb the information. You have seen some trades already. We have been executing trades already. You understand roughly what we're talking about. But in order to truly explain the nuances here, you need to be on the streams consistently, or simply be in our Telegram or VIP. Top 5 trending. Hey Lorenzo, you say you mark out the fixed range volume profile on a certain range, and then you notice the levels are different across the 50-minute, 30-minute, and 1 hour. What do? Which one should you be most relied on? That's a really good question. Okay. The best way to explain this, and I need to find a range first. Let's see if I can find a range here. Let's see if it changes. Here it doesn't really change from time frame to time frame, to be honest. It's really similar. You see that? It is actually really similar. It doesn't always is changing here. But let's say indeed that's the case. Then price will probably go towards that first level you're going to see first. So if you look at a setup like a CRC right here, price breaks down, it pulls back, then you're going to get a level here. And let's say on the 30-minute, the level is right here, right? That's your question. So let's say this is the 30-minute and this is the 50-minute. The first level that's going to get hit is the 50-minute. So focus on the 50-minute because you want to see what the first level does. You want to watch and wait for a response. You want to see how price rejects. If it does reject, you know this is a vetted level to work with. But then focus on the 50-minute. You quite quickly will see, once price pulls back into the range, which one is correct and which one is not. I'm currently on the CUT chapters. The book is great. I just want to know, is the CUT reliable on the higher time frame? Or can it be used also on the lower time frame, such as the 1 hour and less? So this is how the LTA framework really works, okay? We have our macro fundamentals. This explains you the CUT data like you're talking about here. This has to do purely with the higher time frame. It goes hand in hand with macro technicals, macro supply and demand, all right? Higher time frame, supply and demand goes hand in hand with the CUT data. The CUT data, or the macro fundamentals, gives you the data, the proof, the edge, the confidence that your technical levels will hold or will break. The probability of a weekly demand holding with bullish CUT data is significantly higher than a weekly demand holding with bearish CUT data. I hope that makes sense. Once this is clear, you can zoom in, go to the internal structure on the 1 hour or lower to find your executions. But this is only done throughout volume analysis and certain execution models, okay? And entry models around it. This is how the framework works. On the lower time frame, volume is king. Yet you still utilize the higher time frame CUT data if there are signals to do so, or if there are reasons to do so. I hope that answers your question. All right. Yeah, we have been streaming for roughly around, 3 hours here. A little bit slower today. Again, it's September, the CPI. Don't get me wrong. It is what it is here. But anyways, this is the setup. The setup is still there. Do we pull back? This is a valid trade idea, valid trade setup that I would take for sure. Dollar CAD is doing something similar. If the dollar CAD comes down and it pulls back, it is setting up for a similar setup as well here. All right, both of them are looking on the weaker side, dollar CAD and dollar Swiss. Gold right now at the moment is pretty much ranging. Okay, gold has not been moving since the New York open here. We're literally at the opening price right now. All right, look at that. Nothing on gold here. All right, so gold needs to break. Gold needs to go. Give it some time for gold to develop here. You know what we're looking at. Larger breakout, continuation, and a breakout, pushback, and continuation is, in my opinion, the only way. Or we wait for price to pull back into 8-hour demand. Right here. 8-hour demand. Pull back. Then look for that continuation play and then continue to go higher here, all right? So a lot of gems shared today, and these are all snippets of things that we're going to do. Pretty much like I said before, all right? The thought process is the following. We are preparing for Q4. Q4 is where volume is back to normal, okay? We have the FOMC coming next week. we are preparing right now. Our mission together is to set yourself up for success in Q4. That's the mindset. So if we take trades, great. We execute trades, fantastic, right? Part of the game, beautiful. You see it happening in real time. You can go back to some of the previous streams for the trades. If you really want to, you're so obsessed with the trade setups, etc., go back, right? In the meantime, if there is no trade directly on stream, understand this is a process for you to understand what we do and how we will absolutely crush it once the volume comes back into the market, because you understand all the ins and outs right there, okay? We're pretty much building the arc. That's the best way of explaining it, because the world is going crazy. You've seen what happened yesterday. These are all warning signs. I don't know. If you don't take it serious, and if you don't want to change, if you don't want to build something for yourself, you want to help out your family, the people that you care about right now, then this is the moment. It's not the moment to be random. It's not the moment to be distracted. It's not the moment to sit on your ass and scratch your left ball sack. This is the moment to take action for a variety of reasons, okay? We're here for you. Let's see what we can do. Next week, I will be back on a Tuesday here. Tomorrow, I will be traveling to Singapore. I will also partially be in the LTA trading floor in our VIP. So once again, if you're interested, you can open up a form that we've showed you beforehand already. Right, you fill in that form, we'll get back to you, or you join our Telegram group where you get daily updates for pretty much all the setups that we already have been talking about. Okay, all the setups that we are talking about are be shared or will be shared in the Telegram group as well if I'm not live on YouTube. Okay, the way to join that is by simply go to my description, click on that link right here, follow these steps, talk to me, I talk to my team, and we'll get you into the group right there. Okay, thank you. Yeah, look at the setups, I would say. Watch these type of setups right now, see what's going on here, and then let's see if this continues to work in our favor here. Fully confident that we're gonna see what we can do. And yes, let's get to work. All right. Thank you guys. I'll talk to you guys later. Yes. Dollar switch, dollar cat. Pay attention to those. See you next week. Looking forward to it again. And let's crush it. Peace out.
I've been in the field with whatever they throw at me. Brush it off, pick myself up, moving on to the better. Hey. Ain't no errors, baby, it's a new era. I wake up early, feeling rich like I'm Kesha. I get to the paper, boy. Extra, extra. Fuck with me, you know that I got it. Come with me, let's take a trip to the islands. We up on the jet, we'll do more than just fly on it. Stand on that hill, you gon' die on it. Boom. Baby, I'm not one of them, you should try on it. Miss me with all that, I'm on it and next. Fuck this up, I send you back to your ex. But good luck with that, this is big as it gets. Hey, let's see how you do under pressure. Let's see how you do under pressure. Give them a name to remember. Hey, let's see how you do under pressure. Let's see how you do under pressure. A moment can live on forever. Yeah. Oh shit, they don't let me shoot a whole clip. Firepower in this coalition. We just turned the field into a demolition. It was desolate, but I had premonition. I was training for war, every exhibition, every extra mission, every enemy listening. Get off my dick, I got bad intentions. Make it right every wrong, and I'm back with a vengeance. I show you the ropes. Peace in my town, I can show you the coast. Up in the shots if they wanted to smoke. If you know, then you know. Suited up, bitch, my whole team do the same. Don't you forget who created the game. Ready for war, I was born with grenades. The trenches where soldiers are made. Let's see how you do under pressure. Let's see how you do under pressure. Give them a name to remember. Hey, let's see how you do under pressure. Let's see how you do under pressure. A moment can live on forever.